Good day, I'm Martin Gagel with Market Radius Research. We've got CEO Paul Pederson of Nextleaf Solutions joining us today. Nextleaf is a licensed Canadian manufacturer and distributor of THC and CBD vapes and oils with over 19 patents on cannabinoid processing, extraction, and distillation. Paul's here to discuss his 2022 results and his outlook for 2023 and discuss the state of the market. But please remember, this is neither recommendation nor investment advice. We're here to learn about the company. Paul, thanks a lot for joining us today. You just released your fiscal 2022 results, September year end, at the end of January here. Let's discuss, give us some highlights of what 2022 looked like for you guys.
Yeah, it was a big year for our company. We increased revenues over 52% with annual revenue of $5.35 million, cost of sales of $3.7 million, which was actually a decrease of 12% from the year prior. A significant portion of our cost of sales is related to excess capacity. So as the revenue scales with increased distribution, and our gross profit is expected to increase, and posted a gross profit of $661,000 for the quarter and for the year, excuse me, and cash used in operation of just over $800,000. So I think what the results really demonstrate is a company that's right-sized for the Canadian market, and that is technology-driven, very efficient with automation, and it has a clear path to profitability here in a very challenging environment and very competitive environment here in the Canadian market.
Well, I just wanted to, I was looking at your financial statements in 2021, you actually had a negative gross margin. And so you flipped that around to a positive gross margin in 2022. So when you talked about the drop, it was the actual absolute cost of production dropped, even though you did 50% more sales in the thing. So obviously you're getting better on your production, you're getting some economies of scale going on.
Yeah, and it's really about utilization. I mean, there's been a few things that have happened. There's been certainly price compression in the price of bulk THC and CBD, and that has washed down into the adult use market at retail, right? So products have gotten cheaper. Certainly, we've been part of that in bringing our patented technology and being able to produce high purity distillate very efficiently. Certainly, what we've seen in the industry is with the price compression, certainly some less efficient processors have exited as to be expected, and there's sort of this right sizing of supply and demand. But it's been a bumpy couple of years for both cultivators and processors like ourselves.
All right, and can you clarify are you able to buy your raw material, the leaf, at a cheaper price since there's downward pressure? And is that sort of as well the downward pressure on the end product that you're selling? But you're explaining to me before that you're not quite sort of buying it on the open market. You've got a different model on how you're getting the raw ingredient.
Yeah, raw materials, so bulk flower have certainly gotten cheaper as well. There's been corresponding price compression on flower as well. There's a lot of flower, there's a lot of low-end flower. Most large producers are only utilizing about 20% of their harvest and what they grow. So there's a lot of material out there, and Nextleaf actually hasn't been all that active in producing or purchasing raw materials, because we have a very unique program, as you referenced, where we partner with cultivators through our commercial partners program, and we actually take product that they are going to destroy for mainly due to the age. Dried cannabis only keeps for about 6 months. So we turn this aged inventory that cultivators would otherwise destroy, we turn that into a beautiful high purity distillate, and through our technology, able to get it to a beautiful finished product free of waxes and sugars, and allows a portion to go back to the partner and allows us to build our inventory. Again, we're, I like to say garbage into gold, because we're taking a product that's essentially unsellable and pulling out the cannabinoids and getting to a high purity ingredient that's able to then power vape pens, edibles, oils, and all the other infused products that are in the Canadian market.
So are you actually buying their product, or are you kind of doing some revenue share or that with them once you sell it? And as because it costs them to, you can't just dump it in the bin in the backyard. Like exactly, is that like a revenue share, or how are you doing that?
Yeah, so we give a portion of the product back to the cultivation partner based on the potency. So the more potent the raw material is, then they can get more of the oil back. So for us, it's a very cash friendly way for us to build inventory, and it allows us to again push out more costs out of our business model and be able to really compete, and more importantly earn a nice margin on both our bulk business and then our consumer branded business as well, which uses our ingredients.
Oh, so you take the product and then you produce finished product with it, and they get a cut of that. So it's sort of repaid in kind. You give it to us and you share a bit, and then they can sell that for the profit and so forth.
Exactly. Yeah. And they can sell that. They can put it in their own products. They can sell that through their own wholesale channels. And, for us, it's it's been a great way for us to fund our business, but also I think more importantly, it's a real validation of our technology, because what we've been able to do is produce the highest purity distillates in the country. A lot of technology around removing the waxes, removing the sugars, and being able to produce a really high purity ingredient from this lower quality material that would otherwise be destroyed. So it's a great economics of it, and it allows us to produce some beautiful products for consumers and retailers.
Gotcha. You still lost money this year. Your balance sheet's okay. It's not great. You got some of your you've got a loan that you got pushed back to be due in June from March. What is your financing situation looking like for 2023? Are you going to have to raise some capital, get some bank debt, or what are your options on that?
Yeah, we're not expecting to raise equity this year, but certainly are expecting to announce some new debenture financing. I think Nextleaf, in the commercial success of our brands and really where the company is building, technology, IP driven company. And now that we're 4 years into legalization, certainly there's more options when it comes to economical debt. And for us, we've been over the last quarter really funding the business from the cash flow, and continuing to stay lean. And for us, we expect to be profitable this year, and really for us, we see great opportunity to fund the growth through economical debt.
All right. You grew your revenues 50% in fiscal 2022. Any guidance on 2023, or sort of general, like maybe not a precise number, but general at the same growth rate? Or can you give us any sort of thumbnail outlook on what you're expecting?
Yeah, I mean, subsequent to year end in the last quarter of the year, which is our Q1, and we're going to be reporting here on the end of the month. But we saw sales grow about 40% here in BC from Q3. So certainly the business is headed into a really exciting place where distribution's increasing in Ontario. We're getting into our brands into more storefronts. We expect to launch into the prairies here in the next few months, and continue to grow our wholesale business. We supply ingredients to most of the top selling vape brands across the country. We expect that business to grow. And for us, in 2023, we expect to double our revenue. That's what kind of our sales projections are based around, on the business through the provincial government distributors, and obviously our wholesale business supplementing that as well.
Roughly how much of your business comes out of BC versus the rest of Canada?
BC is more than 50% of our business, and very proud of what we've been able to do in BC. We've been able to outsell Canopy, Tilray, Aurora, Sundial, the big publicly traded producers that have raised and deployed literally billions of dollars. We've really built our brands, I think, in in a manner that has allowed us to bring some great products to the adult use market here in BC, and again, been very successful relative to some of these large brands. And 2023 is now about expanding into additional markets, into Alberta, Ontario. We recently announced a distribution deal with the largest cannabis distributor in Newfoundland, which we're very excited about, and see opportunities to grow the business outside of BC in the international market as well, which we recently did our first export of vape pens. So certainly BC is a great market, and we've had tremendous success with our vapes, our oils, and our soft gels, and see now 2023 all about expanding that distribution coast to coast.
Are you seeing your gross margins hold in there from last year?
We are, and we've got some great products, especially in our CBD oils, with margins over 50%. For us, having the technology to be able to produce this high purity ingredient very efficiently allows us to be competitive, and I think been able to structure these deals with our raw material providers, as I mentioned earlier, that allows us to really hedge on some of this price compression here, and really stay on top of it. So for us, I think we've been able to certainly, because of our overhead, we're in a right size production facility, and manage our overhead expenses very carefully. And again, being a company that's really driven with its automated extraction plant allows us to really hold on to those margins relative to these large producers that have way too big of production and excess capacity that doesn't allow them to be as aggressive on the margins.
Any thoughts on the market in the whole? Obviously, like, the industry was way over invested in, with billions being put in, and now there's big excess over capacity. Is this going to be a year of consolidation, you think, where the smaller, weaker players fall off, mergers, sort of right sizing across the industry, which will hopefully sort of stabilize the pricing?
I don't necessarily see the smaller guys falling off. I think it's kind of going the other way, where, if you look at the data 3 years ago, the supply was predominantly coming from large scale cultivators, mostly the publicly traded guys. And what's happening is now the smaller guys are winning that market share away. And what we've seen, obviously, the bigger guys have shut down facilities. Millions of square feet of facilities have been shut down across the industry, and I see that continuing. And there's obviously there's a number of companies that have gone through bankruptcy simply because they were too big, right? The economics don't make sense, and just a big mistake, I think, across the board, where there was companies that were focused on funded capacity, and really what it comes back to is distribution, and more importantly, being able to put quality product out that delight consumers. All
right. You did some international sales. You announced your international sales. You're a bit of a technology company as well. You've got 19 US patents and 100 international patents. Is there any way for you to monetize some of that? You've got the Canadian market, maybe license off some of that technology to other regions to help monetize that?
Yeah, I mean, we definitely see that opportunity. In 2020, before COVID, we had generated licensing fees that had really paid for the patent costs, and developed this portfolio of over 100 patents issued globally. And what I like to say is Canada is really about validation, right? Or Nextleaf and its branded vapes and oils have been outselling these larger, better resource companies, and I think it's a validation of our technology that the IP stack that Nextleaf owns, 19 issued patents in the US, I think becomes very valuable when US legalization happens. And what I always say about patents, it's not about using them as a sword, it's about using them as a shield. And what we think the patents allow us to do is it prevents anybody from stopping us in what we believe is the most efficient method to produce CBD and THC ingredients in the country, and in a regulated market, which I think is very important as well. U.S. CBD industry is obviously unregulated. The THC industry isn't very well regulated, and for us, we've been able to again take this waste material, turn it into a high purity ingredient free of pesticides and all the undesirables, and been able to have a lot of success with their own brands, as well as supply a lot of very large, well-financed companies that could produce their own oil, but they come to Nextleaf because of the quality and the economics of outsourcing that business to us. So we really believe in the economics of the extraction and processing side, especially within an environment where there's a lot of lower quality material that has to be turned into oil ultimately. And we think that we've really deployed the right strategy to take advantage of this opportunity. Again, Canada is relatively a small market compared to the US, but it's a very important market because of the regulations here federally, and because of the competitiveness. I think it really demonstrates, again, the value of our US patents when the US does finally federally regulate and legalize cannabis.
Do you think you'll be able to, do you have to wait for US regulatory acceptance of the market, or are you able to, I don't know, to monetize it, license it prior to that?
Yeah, we're always exploring opportunities in the US. I think, for us, I think the US isn't that exciting until there's something done with federal legalization, and 280E makes really every US operator not profitable. And simply because they can't deduct their business expenses that we can in Canada. So, for us, we're certainly in no rush to go to the US. I mean, as you mentioned, we've got a tight balance sheet, and, for us, we want to win here in Canada. We think it's a phenomenal opportunity to really validate and demonstrate our technology. We think at our market cap, our company offers tremendous exposure and upside to folks that believe in cannabis as both a medicine and as an adult use product. And certainly for us, I think as a company, we think we're just scratching the surface when you think about kind of what's happening globally with cannabis. Canada is only the first country to legalize this, and countries like Australia and Germany and Israel have legalized cannabis for medical use. But certainly, I think we expect to see a number of jurisdictions in Europe, Asia, follow Canada's lead when it comes to regulating and legalizing this plant. And for us, we really see ourselves as a global technology leader, where we hold patents with 20 years life in a number of jurisdictions that allows us, I think, to expand quickly through either licensing deals or setting up company-owned facilities in these emerging jurisdictions as opportunities arise.
All right. And one last question here. In the Canadian market, how is, sort of on a macro level, like the market share of extracts and oils versus the flower? What's kind of the market share, and is oils growing, or is it kind of staying the same, or what are the dynamics between oils and flowers?
Well, over the last year, you've seen vape pens certainly grow in popularity. Extracts are only about 30% of the market. So again, still a very small portion of the market, where flower pre-rolls makes up about 70%. For a lot of that is lower margin parts of the supply chain. We really like the extract categories. We recently launched our soft gel capsules, and we have now we're in the top 3 top selling capsules in British Columbia, and really see these as more mass market consumption formats. What we also see happening in Canada is eventually CBD will get deregulated, or the sale of CBD will get deregulated. We have the #1 selling CBD vape here in BC last quarter, and are very excited to continue to launch more CBD products. And we see there being an opportunity to distribute our CBD branded products outside of the same supply chain where THC is distributed through, obviously, government provincial government distributors. We see a change in the CBD regulations in Canada in the next couple of years. I think that's going to be certainly a driver of our business, but we'll continue to focus on low cost ingredients and really sticking to our competitive advantage and distributing some great products through BC and the other provincial government boards that we deal with.
Paul, I think we've covered all the main points here. Any final comments before we wrap things up?
No, I appreciate the opportunity to share our story and our developments in 2022. We think that certainly Nextleaf going through this evolution from simply an ingredient supplier to now a distributor, manufacturer of branded products has been it's been a challenging year for us. Certainly, we're very excited though with where the business is headed. We think that the 2023 is going to be a very exciting year here, and I appreciate the opportunity to chat about it today, Martin.
All right, thanks a lot, Paul. All the best, and talk to you soon.